Good morning, this is Tom Soane, and today I wanted to share some information which might dispel some common beliefs that all property investors, all landlords are absolutely loaded. Now look, don't get me wrong, there are some property people, some people who have property portfolios and continue to invest in property that are well off. So first of all, of course, you'd have to ask the question, what is wealthy in your opinion? Is it tons of money coming in each month? And if it is it $5,000 a month? Is that wealthy? Is it 10 grand a month? Is that wealthy? Is it 50 grand a month? Is that wealthy? Or is it someone that owns £200,000 worth of property, or £800,000, or $1 million, or 10 million, or 50 million, 100 million, billion, whatever it is? You get the idea. So look, I'm going to assume that your idea of wealthy is similar to mine, but I wanted to give you some real insight into how much a landlord makes, how much property investors make, and how much money, I guess how much wealth they accumulate, how much income they receive from each property, and then show you how, hopefully, if you do it right and you have the right strategy and you do it the right way and you're smart with it, then that will compound over time, and you'll keep adding properties and you'll increase your income and you'll optimize your profits and you'll maximize your income and you'll minimize your expenditure and you'll minimize your risk. And if you do those things, then actually you could be a wealthy property investor. So first of all, let's start with the basic one. A buy-to-let landlord, someone who's just bought a property, rented it out. What are the factors that contribute towards that landlord's income? So number one, I'm going to assume that the rental income on that property is $750, let's say £800 a month. I'll use £800 a month because that's a fairly standard rent for around my area in Portsmouth or Southsea. So if you're in a different area, then you can just work the same sort of calculation out for your own area. But my rents around here, you're going to get a 2-bed house in a central part of Portsmouth for about 800 quid, maybe 825, but 800's easier to calculate. So for 800 quid, that's your rent coming in. Now that is not your profit, obviously, as you know, and as a landlord, you probably got a mortgage on that property. If you don't, then you probably should have. Get some financial advice on that, that's for sure. So if you are receiving £800 a month on your rent, and you are spending out £300 a month on your mortgage, assuming it's an interest-only mortgage, it will be a higher mortgage payment if you have a repayment mortgage, and that's where you're paying off the interest and the actual loan amount. So you're paying out £300, you're left with £500 a month. Now, a lot of people think that that is your profit. It is not, because also, as a landlord, there are compulsory things that you must do and spend money on. For an example, gas safety certificates, electrical installation condition reports, energy performance certificates. Then there's the standard maintenance of the property. It's not free and it does cost money. So the way I calculate that is, generally speaking, especially as well if your property is managed. And look, if you're going to really be an anonymous landlord, the first place to start on that journey to take care of a part of your anonymous journey as a landlord is to have a good managing agent. And that's only one part, a very small part actually, of the anonymous landlord way of life, quality of life. So you've got a good managing agent, you've got all of the maintenance taken care of and forecasted for and accounted for, you've got all of the compulsory compliance that you have to take care of, and then you've got other things. And this is where I try and calculate a good forecast. So the average tenancy in the UK, so I'm led to believe, is about 44 months. Now that's going to be higher if you've got a 2 or 3 bedroom house. It might be lower if you've got a studio flat. But if you calculate that, then now you know roughly when you should account for a replacement tenant. And that's going to cost you another bit of money. Whether you use an agent to rent that property out or whether you do it yourself, there is going to be a cost element in there. Now that might be time, it might be money. So the way to calculate that is just every 44 months, I'm going to have to spend money on a new tenant, right? That's fine. Anyway, You've got £800 a month rent coming into your bank. You've got £300 a month going out from your bank to your mortgage lender. You've got, I don't know, £50 a month going out for various insurances, landlord insurance, buildings insurance, whatever it may be, that is going out. And then you've got something in the region of £160 a month going out of your bank every month. Either put it in a pot or just account for it, where you've got management costs and maintenance cost and compliance cost. I normally work that out at about 20%, something like that. So now you know that you've got £300 going out, you've got £50 going out, and you've got £160 going out. So what does that adds up to? What, 510? So you got five. Let's just round it all off. You've got 800 coming in, you've got about 500 going out every month. Now, if you have a month where you don't have to spend any money out, i.e. no maintenance, nothing like that, great. That month you have made a bit more profit. However, don't get silly, don't get greedy, don't get ignorant, because it all balances out over time. Over the course of a year or two, you will spend an amount of money on maintenance and fixing things and so on. So now we know that you are making a net profit, a gross profit, sorry, and I'll explain the difference. You are making a gross profit of £300 a month. That's not too shabby. So before we get into anything else, a standard buy-to-let landlord is making and should be making about £300 a month. So now it doesn't seem so unbelievably wealthy, right? Now it doesn't seem like, geez, that guy's swimming in money. He's making £300 a month, right? But that's also before tax. And that's where the kill comes in. Now, if you have purchased the property as a limited company, which I do, then you are going to pay the tax man 20% of your profits. Boo! Now, look, I'm not going to get into expenses and shit like that. I'm just going to treat this very, very normal. So now let's say I make profit of £300 per month, of which there is going to be £60 a month, 20%, as tax. So now I'm only making £240 a month per property. So now, look, it's still, you add that up over lots and lots of properties, then you're doing all right. If you've got a job as well, actually, that's a nice little extra income. And you also always own that asset. You maintain the ownership of that asset. So that's going to grow in value too. But in actual cash flow, people think that landlords are just swimming in money. Well, I don't know the actual stats, but a very high percentage of the UK's landlords are just single property owners, or single lettings owners, or single rental property owners. A small percentage of those people have up to 5. It's something like 6 or 7% of the country have more than 5 properties. So that's not really a lot. Now look, I want to get up to the higher levels, right? Because what you do is I make 250 quid per property, let's say, and I want to keep compounding that, and I want to keep generating more properties and more properties and more properties, and that for me is pure profit, so I can use that money to invest in the next property. But anyway, back to the original point, is that a buy-to-let landlord probably makes something like £200 or £300 per property. So when you look at someone who owns one rental property, you might think, yeah, hey, they're bloody loaded. But no, there's some costs involved there. There's some things. I don't know what it is. It's like a subconscious thing, isn't it? You just automatically think that landlords are loaded. So look, I just wanted to share that with you. And hopefully you can see and give your landlords a break. And I'm going to go into this in a lot more detail on my podcast, The Anonymous Landlord. And I'm going to go into the details of each type of investment. So I hope that helps.